Okay, everyone, and welcome to another episode of Quick Take. This time we are looking at Tesserent. I have no idea what this company was about before recording this because my friend, he recommended just having a look at this particular company. So let's go through it together and see what we can find out. So right off the bat, on investing.com, we see it's a software programming and in the technology sector. Okay, so it's cybersecurity networking solution for mid-market enterprise and government customers. Okay, whether it's company operating segments of cybersecurity consulting, Splunk software and licensing, IT security managed service, and other software licensing. Okay, so since it's a software company, scaling up would be much lower cost, so much less overhead, which is always a good thing. So we want to find out all of those things in terms of operation and stuff like that. So let's firstly though, the way we usually do it, go straight to ratio. So the way that I usually do it is to go to straight to ratio and just have a quick look. Quick ratio. Okay, so it doesn't have a lot of cash to last a year, but that's okay in some cases. Well, not really, actually. Let me take that back. So it doesn't even have enough cash to last a year, so we want to be a little bit weary. So you kind of have to think now, all right, is this an investment or a trading opportunity? My friend asked me to have a look at this because he looking at it as a trading opportunity. So he's a swing trader, and he just wanted a second opinion, which is always good. You want to discuss ideas with other people around you that who may have an insight into the company, or maybe even have a different point of view. But ultimately, the decision is yours to invest or not, or trade or not. So anything happens, you can't blame anyone for saying anything else. So let's say a friend told you, no, don't do it because it's too risky and it goes up by 1,000%. You can't blame them for you not participating in that particular trade. So you got to take responsibility for your own actions or inaction. Anyways, lecture aside, let's keep continuing on having a look at this. Okay, P ratio. Company has nothing, probably not making money. Industry is 84, so let's keep that in mind. And you got profitability, so trailing 12 months, TTM, that's what it stands for. Gross margin. Alright, so it's probably just easier. So after looking at the ratios here, quick ratio, current ratio, so basically we determined that they don't have enough cash to last for even 1 year. We want to have a quick look at the cash flow. And it's loading. Alright, and let's have a look at the cash flow. Okay, operating, so it's just losing money like we expected it to. That's why there's no PE ratio. Even if there is, it will be negative, and I already explained in the previous video on ASX REA that negative PE means operating. The actual earning is they actually haven't made any earning because there's no way the price could be negative. Okay, so money from investing. So it's investing heavily, increasing its investment, and if it's one of these sorry, my bad. Let's do annual. Yeah, so still losing money. Doesn't matter. So investing. It's investing as an early company. It's probably investing in people, software. So we want to find that. Other investing cash flow items. Financing. So it's borrowing money. Expected. So there's opportunities here in terms of it could explode. Or it could crash. So this point in time, I'm like, all right, it sounds like a very early stage company, which it can become really big. So you want to find out and all of those things. Net change in cash. Yeah, so it doesn't surprise me, or it doesn't throw me off. This particular company has seeing all of this. Just so we can go to ASX TNT and have a look when it got listed. All right, let's have a look at the balance sheet. Okay, the balance sheet, I expect not much from it. No cash. Cash equivalents. And current liabilities. What are we looking at? 16. Yeah, so that's why it doesn't look like it. Yeah, well, it's expected. Current asset, current liabilities. 14 current liabilities. Yeah, that's why you get the 0.85. Cool. Alright. Oh, again, annual, please. Alright, let's try that again. Yep, let's do the same thing. It's 14, 16. Yep. Cool. Income statement. Let's have a look. Wow, the other one. 2016, so it's 4-year-old. Well, being a public company for 4 years doesn't mean it's 4-year-old. You can, in Australia, you can check when the company formed through the what is it? The check there when they got registered. Anyway, 16 here, so it came up. We'll have a look at the chart in trading view in a second. All right, so revenue. Again, I expected very little. Oh, it's actually made some money. Net income negative. Expected. Okay, so again, this doesn't throw me off this particular company. Just keeping in mind like what stage the company is in, and it looks like it's in its very early stage. And again, looking at these numbers really is preliminary. You want to do more research into company, find out what its market shares, who are its competitors, and what is its operation is like, how many contracts it have. So it's, it's saying, it services mid-market, commercial, and government agencies. So you want to know like those contracts, the terms of the contract. You may not get all of these information, but it's good to have some idea. And if you have insider information, I'm not talking about someone in the company, maybe someone in the industry, and understand how the industry works. And let's say contract, but they got a 5 years contract, but the government can terminate it at any time. So that's not really a favorable thing for the company. Yeah, so that's pretty much it. So it looks like this company is something that I would invest very little in, like again, just a minimum amount. Possibility there for swing traders or momentum traders and stuff like that. So let's have a look at the chart. So here's the chart of the company. So it received a massive surge in cybersecurity. So I think after the pandemic, during the pandemic, there's a lot of people working from home. There's a lot of risk, and governments have risk, and people becoming more digital, like interactions becoming more digitalized. So these kind of companies really benefited from being a cybersecurity company, and events of hacking and incidences of hacking really boosts the profile of these companies and the prospect. So and moving forward, I see cybersecurity as a really good growth industry. So this one is beyond a little bit wider on than investing for those who not sure what to do. Cybersecurity is a good. There's a lot. I think there's going to be a lot of jobs in cybersecurity, and I believe it's going to be a lot of well-paying jobs. So if anyone in IT or not sure what they're doing, definitely look at cybersecurity. And you can see it from universities. They kind of promoting a lot of cybersecurity courses. So that's what I believe this surge is about, is hacking events. I think there's a hacking event somewhere here, and just blowing up the profile of these companies. All right, so in looking at that, I wouldn't buy. I wouldn't invest now. I wouldn't buy to invest. I mean, if you're a swing trader, you can have opportunities. It might go up here. My friend told me like Fibonacci sequence is not very useful for very volatile stock. And looking at this, it could be quite volatile stock. Look at that, those sharp spikes and valleys. So what I probably do if I'm going to short-term trade this, I would wait for it to drop to probably about, I think it will drop back to the 31 cents, 31 and a half cents, and then and then you probably have a little bit of leeway to kind of like you probably have some opportunity when it spikes up again, but if it drops down to maybe 31 and a half cents, I'll probably put in a minimum, because let me see, and you got to think this in terms of like the denomination of the country too, because let's say if it goes up by half a cent, so from 31 and a half to 32, so that's 0.5 divided by 31.5 times 100, so that's 1.5%. But so what that means is, let's say a person put in just 2 cents extra, so it's go out from 31 to 32 cents, 31 to 33 cents, so 2 cents over 31.5, you're looking at already 6%. Right, 6% if you put in $500, 500 times 1.06, it's $30. So it's not much, but that's 6%, and the denomination at certain to a certain degree can dictate the percentage, that the increment of the percentage in some way. So let's say a stock is $10,000, the stock can go up by 5 cents, and really that's really minuscule. But if a stock has very small, the price of the stock is very small, like these ones, it's going up by half a cent, could be significant. So you want to consider that into your evaluation analysis of what to trade and when to buy and when to sell. Yes, so if you are trading, maybe we could increase the time frame to maybe 10, length 10. I usually do the close, and I think my friend recommended, let me have a look. 20 and 50. All right, let's have a look at that. Cool. 20. Put that there. Press OK. All right. So from the look of that, and maybe let's not go day. I think maybe just do hour. All right. From the look of this, we might have passed that buy point here. I'm using EMA, exponential moving average, and it's hard to tell here because it hasn't crossed back down, but it looks like, let me see if I look at this point. Okay, so it peaks, it's a lagging indicator, so so what is telling me, so this blue line here, when it crosses the red line, it's a sell signal, but it doesn't really coincide with this particular sell signal here it's already really happened. So I mean, if if you buy down here and then you sell around there, you're still a winner. That's fine. Yeah, there's definitely opportunity to trade here, but not at the current level. I believe there's still unless you're a momentum trader, you might push that up, but I'm not really one. So I wouldn't. So short story, I wouldn't do anything here. If it goes down, I might do it. I might go in, and then it most likely will come back up. I'm really am just a value investor, really. I just can't see myself trading short term like that. I mean, it's a lot of winning stories, but at the same time, how many of the loser story we don't hear about? It's kind of like a survivorship bias. So got to be careful about that also. Yeah. So at the end of the day, what's the conclusion here? Possibly a good investment if I review it in maybe a couple of weeks or couple of months, just because of the sector it's in. Don't know much more, so I've got to do more research about this company. For the traders out there, depending on what type of traders you are, I still believe there's a lot of downside, but not a lot of upside, just because of the point that where it is at the moment. It's never been this high before. So I would wait for it to drop back a little bit, and then you can see the momentum slow as it decides what it wants to. So what the market decides when it wants to do next. With these kind of company, there's not a lot of financial data to kind of back up what the company is going to be like. So I think doing technical analysis is probably sufficient. And then you do kind of like projection using your own ideas and your own intuition of the industry. But it just, there's not enough data to go and find out if this is a good company or not. All of this hype is just circumstantial. All right, so I would probably enter in around at the 31 and a half cents mark, or maybe a little bit higher if I'm FOMOing out. But yeah, and if it drops down here, I'll probably buy again, just the minimum. And I think it will drop down to the 65 cents mark. Not 65 cents, 6.5 cents mark. Just when it quieten down a little bit. But that's the thing. I don't think it's going to quieten down, just because the hacking is going to be more prevalent as people do more work online. So maybe we'll keep this uptrend, but I really highly doubt it, just because that's not sustainable. Because if you think about it, as the price of a company go up, right, selling pressure increases, because it's getting too expensive. So here investors are hyping, and keep pushing the price up. But as it gets to a point when investors feel like, wait a minute, this seems a little bit overpriced, then they'll pull back on the buying, and then the one at the top who just bought suddenly gets scared and wants to sell before they think it's going to crash. Or then either they're trying to do a fake break, or they might sell just to recoup the loss. And maybe those down here seems like, probably those who buy from down here probably seems like, probably this is gonna see as high as I can go for now, so I'm just gonna sell. And that creates a snowball effect of selling pressure, and then pushing the price down until the price gets down to a point when people say, hey, the price dropped, that seems reasonable for trader invest, I'm gonna go in. And then as it drops, the buying pressure increases and it pushes the price back up. So got to keep those dynamics in mind. So I'm just trying to keep that dynamic in mind, and just think like, hey, the buying pressure here is probably tapering off. It's got to drop back a little bit. It got to retrace a little bit. So you can see here, it has to retrace a little bit before it goes back up. Not a lot of retracement. But here there's a significant retracement. So what I expect this to be, this point here, so it looks like it's going in the pan. So what I can see is that it will most likely retrace down to this point, or maybe just a little bit higher depending on the news around it. So I think it's around this mark, maybe 34, 32. And then the market will consider, is this a good buy or not, and then it will push it back up. Yes. Now, yeah, but at the end of the day, the money that you don't lose is the money you earn. A penny saved is a penny earned, really. So, you want to look for a good opportunity. 9 out of 10 times you're looking at stuff and you're not doing any purchasing. You just need a one time to make your money. Don't rush into it. I have rushed into it and I've lost money. So, or it cost me, what is it? Opportunity cost. So that's something that you want to prevent. Like Warren Buffett said, it's easy to save $1 than to gain back $1. Okay. All right. So if you guys like what you see, please give a thumbs up, like, and a comment. You can comment, whether what I'm about what I'm saying or your own thoughts. Just please keep it civil. We're all learning along here. Nobody is correct at any one time. Nobody can predict the future. And in saying that, none of what I'm saying here is meant to be a financial advice. If you do want financial advice, this is my disclaimer. Please seek your financial advice from your financial advisor. But beside that, thank you so much for watching. If you like what these quick takes, please comment which company you would like to see next. Normally I get a recommendation from a friend or maybe myself or through my own research and stuff like that. All right, thank you so much everything guys, for watching, guys. Have a pleasant time trading, and good luck.